Good day to all. The theme around which myth then rise is which market to choose. Failing in the market and you hear the answer that you've chosen the wrong trading strategy. Failing in the market and you hear the answer that you have chosen the wrong moment of entry. And again, failure in the market and you hear the answer that you have chosen the wrong market. And so on to infinity. You learn but run on the same wheel as a hamster in the cage. But what is the problem? In markets, strategies, timing, or is something more behind speculation? Just at this webinar, we will try to figure out what the main problems is and where the myth is. So, the first picture, just a moment, I will share my screen. You can see my screen. And here the first picture. So, as you can see, the picture is almost identical, but there are completely different tools and even different markets. Here, Akamai from the stock market and pound to Canadian dollar from the Forex market. Here the movement continues after exiting the range. You see here range and exiting the range and clear level. And the same picture here, clear range, exiting the range and retesting this range. And the range is the accumulation of the position, and the longer the range lasts, the stronger the movement can be expected. Many try to ask unnecessary questions or questions for which there is no answer. For example, who accumulates this position or how long the range will last? Believe me, besides who accumulates, no one knows. And no one knows how much time accumulation will be. Otherwise, the whole world would work from the same strategy and make a profit. Just a miracle picture would be. No one works, no poverty, because the financial markets provides everyone. But you understand that this does not happen. As according to the law of physics, if it rises somewhere, then it decreases somewhere. The economy is capable of producing about 2% of GDP today, and all that is higher is a speculative plus for risk and better brains. Let's go back to the example. How long does a trader need to wait and when to enter? Here, or maybe a little bit more for waiting and entering here. And this question is also not easy one. Everything is so beautiful only after the fact. You see, only after the fact, such a great movement here on here and such a beautiful retesting of this level. So, the market is changing. The nature of movement is changing. Volatility is changing. It is very important to choose the right moment and waiting time. Sometimes the market is fast and volatile and does not offer long-term consolidations, and it is necessary to act more aggressively. More often, the market is sideways, and then it is advisable to wait longer. Trading is working with your statistics, optimizing based on completed transactions. Wait 15 minutes or a couple of hours, and maybe a couple of days. Efficiency will tell you will tell only your statistic. And the difference in the market will be exactly the same as the difference in instruments, that is, the nature of movement, liquidity and volatility. And once again, you see, if the different markets, in the different instruments, but the same situation. You saw a beautiful picture before, and now attention to figure 2. You see that more often the market will not produce the most beautiful patterns and levels. And the more liquidity comes, the less volatility, the more noise and problems for short-term traders have. This is exactly what is today's market, and for this reason, only traders have left forever with empty pockets. And picture 3. Now and the new market. This is the Russian market. And just like in the previous example of the Australian against dollar, here in the RTS index, the struggle is around 1455. And a breakdown, you see. 1, 2, 3, try to hold this level and break down. And then the retest goes very rudely. There is no clearly sustained price. The level is simply sold. This situation is like you need to wait until this rudely market will give you more realistic chances to act. So, do you think that this is the end of short-term trading and the end of trading from levels? Just such examples in realities will be much more than pure and beautiful levels. That is why units survive on the market, and the question is not whether the strategy works. Now look at picture 4. And now you see that there are clear and understandable situations in the same RTS. It's a Russian market, like in 1250. You see breakdown, clear holding and move higher. Or a false breakdown in 1270, like here. False breakdown, retesting, and market moves higher. Or trend retention at 1300, like here. And it turns out that the first problem is not the market at all, but the first problem is the ability to adapt the market, understand when it is worth acting aggressively and the market is really trendy, and when you need to be calm and wait for long consolidation until the market pretty much cuts the level to place a relatively safe stop-loss order. The speculator must understand the mathematics of his approach. So, look at the 5th drawing. This is what we talked about at previous webinars. It's good to take 7 to 1, and even 20% of positive transactions becomes no problem. But will there be 20% due to inexperience? And will the trader be able to take 7 to 1 profit in relation to the stop? Here, the trader should already understand the volatility in the instrument, and how realistic it is to take such a potential. So this number will depend on volatility, not only the market, but also in the instrument you choose. And this percentage of win will be depend of your trading experience. And once again, let's look at previous pictures. You see different markets, but the same entering points. Sometimes it's hard to understand where you can take your advantage, but sometimes it works. Sometimes you need to wait much more longer, like here or here. But sometimes in trading markets, you can find a lot of possibilities to connect to this trend. And it's what you need to do. It's your math. Okay. It's the short one webinar. And finally, you can give many examples of successful transactions or possible successful transactions. After the fact, they will be typed quite a lot, especially if you take a separate share, the crypto market and Bitcoin, or indexes with today's irrational growth. But who will guarantee you you will not find yourself at the peak of the market if you are suddenly working with margin lending? And if we are talking about successful startups, what is the number of successful launches, and will you be in the right one? How many projects like McDonald's, Apple, Alibaba, or Bitcoin, how many of them survived? Trying to take a successful startup is also a speculative strategy, which also requires the ability to work with risks. What percentage of the capital the trader will enter and how much he understands what he selects. Therefore, be hardworking and scrupulous. Delve into the number and strategy. Study the nature of the market, instrument, and its volatility and opportunities. Please study your math, your statistic. I hope that the webinar will help you to choose your direction, to understand market nature. Look at the previous ones. You can broaden your horizons. Your best thanks, Alex, for this video. I wish you the implementation of all plans and all the best for you, and see you soon.